Hi, Chase Craig here with Keller Williams Realty Boise and Own Boise. And today I want to talk about the 7 reasons why this recession is different as it pertains to real estate than the Great Recession we had 12 years ago. So before we talk about that, we need to define what is a recession. You might have heard in the past it's 2 quarters consecutive in a row of economic decline reflected by GDP. The National Bureau of Economic Research has lately changed their thought on that. It's basically a significant decline in economic activity across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. I think we all can agree that we are going to be heading into a recession based on what's happened over the past 30 days in the United States. So without further ado, let's go ahead and dive into why is this going to be different as it relates to real estate. So reason number 1, just because we're heading into a recession, I think it's important for us to understand that a recession doesn't always mean that we're going to have a housing crisis. You can look back at, here's 5 recessions on the books: 1980, 81, home prices actually went up. 91, home prices went down, not significantly, 1.9%. 2001, home prices went up 6.6% during the dot-com bubble. And then, of course, in 2008, we saw the crash in the real estate market. So can it go down? Of course it can. Does it always mean it goes down? No. Number 2, the standards in terms of credit availability are significantly different today than they were back then. You had roughly 8 or 9 times as much credit availability back in 2004, 5, and 6 than you do today, and over the last really 10 years. Things have changed in the way that they loan money, and it's a lot more responsible today than it has been. Number 3, the way that we are behaving as Americans is different today as it pertains to real estate than it was 12 to 13 years ago. You can see the 3 years leading up to the recession, there was $824 billion taken out of people's homes in terms of cash out refinances. In the last 3 years, we've only seen a quarter of that, $232 billion. So, most homeowners have equity. They're less likely to walk away from their home if they have equity, which means there's less homes that are going to be on the market. Obviously, the less homes on the market, typically you're going to have it be slower in terms of a decline. Number 4, contrary to popular belief, prices haven't soared out of control. You can see, from 89 to 2000, real estate was appreciating at what it typically did, 4.25% per year. That's a pretty standard number. 4 to 5% over the last 40 to 50 years has been pretty standard. 01 to 05, we had 8.26%. So we doubled the amount of appreciation that we typically have. That wasn't the only reason why we crashed. There was obviously a lot of other reasons, but during that crash, we lost 4.15% over the next 5 years. Now, this 2012 to 15, it went up 7.6%, which you might be thinking, Chase, that's higher than it should be. But most people look at this as just a normal recovery, the bounce back, if you will. And then if you look at the last 4 or 5 years, it's been somewhere between 4 and 5%. It hasn't been out of control. Reason number 5, inventory today is significantly lower than it was leading into the recession, the Great Recession. In 2007, we had almost 3 times as much inventory as we do today. All across the country, this number fluctuates. Here in Boise, Idaho, our inventory is half a month's supply on the resale market, under $800,000. So, the more homes that come on the market, it actually could give us some reprieve in terms of pricing. So there's significantly less inventory today. Reason number 6, this is all about borrowing money and the cost to borrow money. If you go back to the 1980s, interest rates were, it says 16.6, they were flirting at 20%. Over the last, 20, 30 years, the average rate has been 6.4%. Go to 2007, our rates were hovering right around 6.5%. So it was more expensive to borrow money back then. Today, 3.9%. I mean, we're seeing people under 3.5%. Lastly, affordability. This has a lot to do with the rate. There's really three things that create this number, a soup, if you will. It's income, it's the cost of real estate, and then it is the cost of financing. So they take that, mesh it together, come up with an affordability index. If you look at 1980, 1981, when interest rates were 15, 16 plus percent, the affordability index was really high. So it cost a lot of money to get a home. You go back to 2007, the prices were high and the rates were higher, and the income wasn't matching. So the affordability was, almost not quite double, but 50% more than what it is today. You go back to 2010 and 11, everyone knows that the market hit the bottom then, and affordability was really low. It wasn't driven solely by rate. Rates were 4.5 to 5.5% at that time. You come up to 2019, prices are significantly higher today, but the affordability is not that much different because income has gone up a little bit and rates have stayed really, really low. So what does this all mean for you? We get asked this question all the time. When's the best time to buy or sell? We often recommend that you take a moment and ask yourself these two questions. Do you have a good enough reason to buy? That's number one. And if that one's yes, the next question is, can you afford it? If you can afford it and you have a good enough reason to buy, the answer is move forward. Buy with confidence. If you're thinking of making a financial decision and you're not exactly sure how you want to move forward for your situation, contact us. We'd love to help you in any way that we can. Thank you so much for taking the time to watch this video. If you have any questions, we are here to help. No one knows what's going to happen to our economy here in the future. I just wanted to show you these facts so you could determine how you want to move forward. And, I know everyone's looking for answers. I hope this has helped you find something out in your situation. Don't be afraid to hit us up if you need something. Thanks so much. Have an amazing day. Have an amazing time with your family. And we're here to help if we can.